Are regional banks becoming the most influential stocks in the market? A real fun story here as we step away from the regional bank crisis. At least we have been as of July 26th here. A crisis that occurred mid-March brought not only the regional bank sector, but the S&P, the Dow, and the Russell, especially, as we'll get to here in a second, considerably lower. It brought interest rate projections lower. It sent gold and some other markets higher. It really threw a lot of things out of whack. And now we've gotten some distance from that. Not so much looking at a crisis, but still seeing stories that are moving regional banks lower and higher in price and garnering, what some might say, some of the largest influence over certain parts of the market. Let's first break down where we've been and where we are currently, which is to say regional banks still down about 20% year to date. And they're definitely creating a little bit of a kind of parachute, a drag effect on the Russell, as you see its underperformance, the S&P 500. And we're about to get into some really interesting numbers historically. If you've been trading the last couple of years, you might think, oh, the Russell small caps, the Russell, of course, is the small cap index here, always underperforms the large cap stocks. This is a relatively new phenomenon that the last couple of years, the Russell has been underperforming the S&P, but we'll get to that data in just a second. You're going to want to stick around for that. But you can see here, it's going to be tough for the Russell to compete with the S&P 500 when regional banks are regional and thus mostly smaller cap stocks. And also the Russell is about 15% in stocks like these regional banks. And the S&P 500 is to a greater extent technology stocks, large cap technology stocks. And of course you hear about Apple and Microsoft, and they're doing quite well. And so a lot of things going against this small cap, this Russell that a lot of people have investments in here and is a major, one of the 3 or 4 major indexes, major measures of our stock market. And you can see here the correlation has by and large been positive between small cap stocks and regional banks here. As you might imagine, regional banks are literally part of the small cap index, but now sitting at positive 0.85, definitely higher than it's been in recent months, as you see the climb in the rightmost part of the graph, and probably higher than it's been on average. Really has kind of topped out around here. And this makes sense, right? The regional bank stocks are really moving around. And when a part of the stock market is moving around more than another part, all else equal, weightings and everything else, it's going to probably garner some more correlation, higher volatility, really pushing that index around. Now I want to rope in some of the other sectors of the market to really show how much this drag has held back the Russell, and potentially show, if the sector can bounce back to even on the year, or can even put in some gains like we've seen in XLK and XLY, which are technology and consumer stocks, respectively. They're up north of 40% in terms of the technology sector and north of 30% in terms of consumer stocks. You could see this Russell compete with the S&P 500. And like I teased earlier, this isn't a novel concept that the Russell could compete with the S&P 500. It used to compete with the S&P 500. I mean, most years, as you see that orange line IWM, the Russell, the small cap index, most years between 2010 and 2018, you're seeing that orange line on top of that blue line. You're seeing outperformance for the Russell in terms of the relative to the S&P 500. When I started trading in 2015 range out of college and onto the Chicago Board of Trade floor there, you saw the Russell outperforming the S&P a lot of times. It would essentially be the way I used to think of it, and maybe is, I don't know if it's the right or wrong way, but was the average way to think of it back then. The Russell was kind of just a higher volatility version of the S&P 500. On a day that stocks are up on average 1%, the Russell might be up 1.2%. On days that the S&P 500 maybe is down 1%, the Russell might be down 1.2%. Whereas in the last couple of years, you look at this graph from around 2018, 2019 until present, it's been more of a, if the S&P is up 1%, the Russell is only up a fraction of that. And if the stock market on the whole is down, small caps are down more than average. As you see, we've gone from competition and even outperformance in the Russell for a lot of years in that range of around 2018, 2019 till present. The S&P 500 outperforming the Russell by the looks of it, close to 100% here, as of course everybody's up in this time frame, but the S&P since 2010 until now up 300%. Russell only up around 200%. So definitely wouldn't be a new thing if this Russell were to start competing with the S&P 500. And I mean, it really could be because of this regional bank stock sector here. You look at the fact that Apple and Microsoft, around 15% of the S&P 500, are up so much in the last decade and a half of trading, and large cap stocks here have really swung the S&P and NASDAQ to see some of those huge gains and diverge from the Russell here. In a similar way, you could see a sector like regional bank stocks, which are around 15% of the Russell index, finance stocks, and the small cap sector there could really start to swing the small cap index here. At least that's been one of the big movers in 2023. And sometimes you see a potential crisis or a big downside move be a spark for an index or a part of the market to the upside. I mean, it wasn't just 3 years ago where the outside of the pandemic really hurt technology stocks, brought them lower considerably in March, April, and May of that year. And that sparked one of the biggest tech sector booms that we've ever seen. And I think in a way contributes to the divergence between large cap and small cap stocks. So we'll see if there is a convergence, a reversion maybe to a historical norm of small caps competing with larger caps. And for the time being, at least here in 2023, it really feels like regional bank stocks, whether they get hit even harder, they fall back into crisis mode, or they're able to shrug off this crisis and put in some gains here, maybe come out the other side, interest rates maybe normalize a little bit lower. Those risks that they were having around higher short-term interest rates maybe dissipate a little bit, and you could see them coming out with a little bit of a boom, and that could bring small caps back. But at least for the time being, hugely influential on small caps, and in much the same way that Apple and Microsoft, the large cap stocks, are influential on the S&P 500 and NASDAQ, regional bank stocks with the Russell. And we'll see if they can get some convergence or further divergence from those historical norms.